Alright, so welcome back to this YouTube channel. Okay, so I'm going to be explaining the trade I took on the 27th June. I made 2k on that trade, and the trade was really good. So I'm going to break it down, telling you how I knew my draw liquidity, and telling you how I got my entry and the best ways to get entry. Entry was available for both EU, GU, gold, and most of the XXX USD pairs. Now let's get right into it. So now I'm on DXY. DXY is the most important index to look at because it's a bit straightforward, and with DXY you can have a bias across all the XXX USD pairs. No matter how confusing their structures might be, DXY will fix that doubt for you. Okay, that's why you have to spend time looking at this, then the others are going to become easier. So we're talking about this day. Okay, so put your focus on this day. Talking about this day, put your focus on it. So I would highlight it, and I'm gonna make it a different color, like yellow. So you see this day, my audio might be a bit disturbed because it's really where I am right now. So what you need to understand first of all is to find your draw liquidity. So if you go to the daily chart, you're going to find out that price is heading higher, okay, to this weekly high. If you go to the weekly chart, you can see how clear the weekly high looks right here. So price is headed there, and if you look at the daily structure, you find out that price just broke daily structure and we are heading up higher. That's like the literal structure we're heading. But what about the 4-hour? We broke this high. This is the 4-hour structure, this green line. So we broke this high, we pulled back, we broke this one. It was impulsive for a while, broke this one in the process. Now it has to pull back to an internal range liquidity. What do I mean by internal range liquidity? Fair value gaps, order blocks, all of them are inside their internal range liquidity. Okay, so in as much as we are in this 4-hour range, between this 4-hour low and this 4-hour high, we're going to decide. So when I analyze my chart, when I find my bias, either previous day or a Asian session, I know where price is going to head to on London. So I had this place marked up. Okay, I had this place marked up. I had that place marked up as an FEG. I was like, okay, price is going to come here, so I'm going to sell during the London. Only for this very silly thing to happen. By London, price was already inside. So now it's bad to start looking for buys because price is already inside that place. Then you now start changing your bias. That's why the time you look for your bias is very important. You don't want to look for your bias during the London session. You want to, because you get confused and deceived. You want to look for it before it starts. That place you're pointing at that's going to go is your bias for that session. Now if you come on London and price has already got into that place, listen carefully. If you get to London and price has already got into that place, do not trade that London again. Don't try to start predicting buys. No, say this is draw. Don't do that. Do not do that. Okay, because you would literally get smoked. So what do you do? Wait for New York. Why do you want to wait for New York? You want to see how price is failing that FVG. Okay, so initially our draw is here, but then by London price has already entered. By 7 Nigerian time, price has already entered there. That's an error. What does that teach you? That, well, now the draw could be higher or it could be lower. So when your draw is not clear to the one side, stay away from it. Okay, now my draw is not clear. So if I come on the New York, I'm going to find out that this place price has started trying to fail it. When I find that price is revisiting this place again after getting it first, and then price is coming back, so that's a sign that the draw is the next internal range liquidity, which is this FG. Okay, that is why I will know that here's the next draw, this FG, and not just this FG, the refined version of the FG. So if you go to 1 hour, you find out that this area, you see this particular area price has mitigated it before. So I was even literally expecting price to come to this other block here, which price will come most likely today, because today I have a bearish bias yet, but I've not gotten any entry. I'm still watching on DXY. So if you look at it, that's the reason why this other block here was going to be where I was expecting price to come to. but then it came back to here, but there's no problem, but it sold literally and it did not buy. So therefore, by New York session, I knew that price was going to go down, meaning XXXUSD was going to go up. XXXUSD was going to go up. So now if you look at Euro USD very well, you see that, see this win here. I did not take it, I took GU instead. Okay, I took GU instead. So now let me explain GU, and I'll tell you why I took GU instead. So now this is the same day. Let's look at the 4 hours. I can get the structure rightly. So this is my 4-hour structure between this high to this low. This is my fib from this high to this low, my recent high and low, my dealing range. So as at New York, we are in the discount area, making sense to look for buys, because yes, of course, we're going to be bullish on GBPUSD because DXY is dropping. And where's going to be my draw? My draw was not this area, because this area was not was not supporting on the lower time frame. So let's look at the 1 hour. You find out that here was kind of weird on the 1 hour, and you find out that on the 15 minutes too, here was weird. The PDR rays are not clear. So that's why I knew that okay, the next draw is most likely going to be up. That's why I put my blue line here. Those that know how I trade know that I put blue lines to show the particular area I'm looking for price to get to. So during the London, because I did not understand DXY, so trading any XXX USD is going to like smack your ass. Even if it worked, it still rallied up, but I did not engage. Now it's New York, I have to engage because DXY is dropping, and now I'm in the discount area for GBPUSD, so I have to look for my buy. So what entry did I use? I know some of you learned about AMD entry and the rest of them. At least the entry that is going to help you, whether it's AMD you're going to trade, whether it's Unicorn, Silver Bullet, any of the entries, this entry is going to help you more and give you more precision, so you don't get stopped out just anyhow. Because some people yesterday were wicked out because of their stop losses were small. Now this is a 1 hour FVG, so whenever you want to enter, make sure you're entering from a 1 hour PDRA, FVG, order block, sweep. Make sure you're entering from there. No matter what entry model you use, this is going to be more safer. Make sure you enter from a 1 hour PDRA, and then what do you do next? When you mark that 1 hour PDRA, don't enter yet, but you make sure you mark it first. Then come to the 15 minutes and make sure it is refined to something reasonable. So on the 15 minutes, you find out that this happens to be this rejection block you see here. You see this wick you see here. The price slightly failed it, but I was still watching. So what you do, you go to the 5 minutes, and inside that same bracket, you want to wait for a 5 minutes chop, or you want to enter from any PDRA that price affect on the 5 minutes. Okay, so me looking at what price is doing, I saw this move drop down, okay, and I knew that there was an FVG here before. So when price moved up again on this candle wick retracement here, I just took my entry. I was kind of late because it was fast. I just took my entry. But if you're going to trade this after price did this high and it pulled back, and then price did this next high, this is an order block. If you enter on that, it's not going to be bad. But what's the key takeaway here? The key takeaway here is this. Sorry. So what's the key takeaway? The key takeaway here is this. Use the PDRA on the 1 hour, okay, refine it to the 5, 15, and then on the 5, wait for price to give you a chalk from it. This was a liquidity run on the 5 minutes. Make sure price gives you a 5 minutes chalk. I mean chalk, change of character, okay, 5 minutes chalk, something like this, and then go up. You know, you can enter from an FVG, order block, anything around this level on the 5 minutes, and then go higher from there, most preferably an FVG. But this 5 minutes chalk is to confirm the 1 hour level. Now if you do this, you will be what, obeying an entry criteria. Now what happened on this entry criteria, you know, my normal entry criteria where I show you guys that if price is going very close to the end of it's going very close towards where you're anticipating to go, you just need a 15 minutes FVG to enter. The same idea, but if you use it from the 1 hour, if you make sure there's a 1 hour PDRA around there, it's going to make it easier and more precise for you. And for you to trust the 1 hour PDRA, you wait for a 5 minutes confirmation to get in. So London also played that, but because I was not going to trade any SSX USD because DXY was not clear. I did not do that, but this is what you would have done in London. This is London, this is FVG from the 1 hour. You come on the 15 minutes. When you refine it, you find out that it's a sweep on the 15 minutes here. See it? Find out that it's a sweep on the 15 minutes if you refine it properly. See, it's the sell side liquidity sweep. So when you go to 5 minutes, you wait for your 5 minutes choke around there. That's just an example how you can cash out from the model. So see your 5 minutes choke, as it just happens, any retracement, although you're supposed to wait till it retraces to something, but you mustn't wait. If you see that choke and then price has given you just a little retracement, you get in because you know your stop loss is still going to be here just to keep you safer. So even if it comes into the FVG, you're safe. So you would have been able to catch this for a 2 hour and even more. So that's what I did on GBPUSD. I'll see you guys in today's breakdown if I win again. So let's go.